Hi, welcome to the Market Alert for Monday, the 9th of March 2015. Just before we get started, just need to remind you that the US moved their clocks forward to the daylight saving hours in the early hours of Sunday morning. So that's reduced the time difference from the UK to New York from 5 hours to 4 hours. So we need to adjust the primary trade times, which can be found in the Settings tab under Primary Trade Times. And what we need to do here is to adjust to 1330 and then 2000 hours there for the close. So instead of the normal 9 p.m. it's now going to be 8 p.m. and I think it's for the next 2 weeks. I'm not quite sure. I will check and we'll let you know, but certainly for this week as well. And of course that means that all the news items have moved forward an hour as well to 12:30, where the main economic news items are out, and 2 p.m. of course for anything that was released at 3 p.m. Once you've made these changes, click apply and then make sure that you save the workspace as well, otherwise you will have to adjust this each time. And if you don't save it, of course, not only that, it may throw you out as well when the market opens as well. Right, let's have a look at the market, see what happened on Friday. We can see that the market was quite volatile when it opened on Friday. You can see there, didn't know which direction to go in, huge amount of buying, and then we saw the selling coming into the market and prices moving sharply lower. So quite a lot of volatility in the first 10 minutes of Friday's trading session. There you can see the market testing here down at the 18,000 level before going up to the 18,050. We did have a sell signal that started to move lower, but unfortunately the market wanted to be pushed higher. But you can see the volume dropping off here, so the market's being held up on fresh air, and then eventually it has to relent and it starts to move lower, and you see the market trading all the way down to the latter part of the session at 17,850 there. So here, unfortunately, the market took out the stop before the market actually turned around and moved low, which is very frustrating. However, notice how the psychological levels in these markets really are a sort of a post or a marker where the market actually trades to. You can see there it traded down to the 18,100, but then to drive through this we saw further selling, and then down to the 18,050 it closed immediately below. And you can see this bar here failing to close above and then trading down to the next level, finding support here, coming back. We've got some buying closing through the 18,050 level, and then we had the sell signal. And it's a shame because the narrowness of this bar is slightly too narrow, of course, because just a 10% stop above that was easily taken out after the market had moved low, which is a shame, because once the market closes back above the 18,050, you can see there it closes below twice. They try and buy it back, but it's on low volume. To go through psychological levels, you want to see big driving green bars. So the market was being held, and then eventually when it closed back below, you see the market trading all the way down, eventually finding support in certain areas where then it became resistance, support, and then resistance here, and trading all the way down as we see towards the end of the trading session there. So it's a shame that the market had this other attempt, and they were marking up the share prices to hold the market before it was released. It's a shame we didn't get that sort of move to the downside just after the sell signal there. In the daily chart, you can see how the market moved lower on Friday. Big bar there, selling as well. So what we need to do now is to see how much this market or momentum this market's got to move back to the upside. And one way to do that is to use the fib retracement tool, which can be found in the markup menu. Over on the top left here, I'm just going to left click on this, and I'm going to draw from the top down to the lower Friday's bar. And what this has done is placed a 62 and 76% retracement on the screen. And what I'm going to look for in this market is to see how well the upside momentum will cope with the 62 and 76% retracement. So as the market, or if the market trades back up to this level, If it fails to close above the 76 or trades through and then closes back, that's going to indicate to me that this market is struggling. And you can see this over here. I'll just draw this one in here. You can see the market trading down to here, traded through the 76%, came back through, and then you see the market moving lower there. So, and there are plenty more examples of this in the daily chart. It's a great way to actually step back and have a look and see how much momentum is in the market by using this very simple technique. On the news front, there's nothing for the US today. And of course, any news items that are going to be released from the US now are going to be an hour earlier. The main ones, of course, usually at 1:30 will be 12:30, and the 3 p.m. ones will be at 2 p.m. But nothing for today, so again, we could expect the market to be fairly quiet there. And finally, on the implied volatility front, we've increased from, I think it was 1162 on Friday to 13. On Thursday to 13 during Friday's session, which is to be expected. You can see there the increase as the market moved sharply lower during Friday's session. So we'll see how this pans out. If it's quiet today, of course, the implied volatility will move sideways to lower, but higher, of course, because of that potential risk that the market could go lower. So the options traders marking up the insurance inside of the put options there. Again, always a good indication of what's going on in the market. Right, that's it from me. I will see you in tomorrow's edition of the Market Alert. Have a good day, and as ever, thanks for watching, also for your support. I shall see you in the next one.